I'm going to get to the markets now. Let's talk China trade. Rebecca Walser is with us, president of Walser Wealth Management. Rebecca, if I'm not mistaken, you say, yes, there is a great deal of pain involved in this China trade spat, but you say it's worth it. We got to do it, and we got to win. That's where you're coming from, I think.
Absolutely right, Stu. I mean, I think Liz is 100% right. Trump is adding manufacturing jobs back. But if we look back at the context of history, from 1998 to 2010, we lost 6.1 million manufacturing jobs right as China started importing so much to the United States. So it's very clear where most of these jobs went. And now is the time that we do something about it, especially with Made in China 2025. That is such a threat to our American way of life.
And we just got this word over the weekend that China had a trade surplus of $323 billion just with the United States. I mean, surely that gives a great deal of impetus for the president to say, come on, you got to start taking more of our stuff. That's what he's got to say.
Stu, that is the largest Chinese deficit, America-U.S. Chinese trade deficit we've ever had, and that is in the midst of these trade tariffs and Trump actually trying to do something about it. So we can see China is obviously a very important economy, but we can see that they are trying to shift their economy to these higher jobs, these more sophisticated engineering jobs, and we are going to be without a partner to ship all these low-cost, cheap goods to us, and we've lost our manufacturing base. So we've got to fix what's going on here, or we're going to be in a we're going to have a huge problem. People aren't even talking about it.
Let me just look strictly at the market for a moment, because there's a lot of talk about Netflix. They're going to report their earnings a little bit later on this week. Some people on this program have said, look, Netflix is the next big super technology stock, be the standout stock of this year. Would you agree with that?
I do, Stu. I mean, it is obviously the best performing FANG stock that we have. It went down like everything in December 24th, like the whole route did. But it's already back up 45% since its low of December Christmas Eve. And, you know, they're spending $13 billion last year on original content. So their Bird Box movie just passed 45 million users looking at this movie, Sandra Bullock. So they've got the studio, they've got the actors, they're outspending HBO and CBS. So we do expect their global growth, their global subscriber adds, it is going to look like a good year for Netflix. I think so.
You're a wealth manager. You're telling people to put their 401k money into stocks as of right now?
You know, Stu, I project some bumpiness ahead. So it depends on where they are in their investment horizon. You know, if they're getting out of the market, if they're retiring the next 10 years, we have to be careful of what's happening this year. We do see some concerns, but obviously, you know, the underlying economics fundamentals are there. The labor market, the unemployment numbers, you know, GDP growth, and what Trump's trying to do with China, I'm very encouraged about. Nobody else is really taking this on, and I'm so encouraged that he's doing it.
Thanks for joining us, Ms. Walser. We appreciate it. Rebecca, thanks a lot.
Thank you,
We'll see you again soon. Thank you. All right.